Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for March 14th, 2011. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. The market's recently been putting in some lows along its previous low. Even the Japanese earthquake wasn't enough to create a breakdown in the market and actually create a little bit of a reversal bar. But in the bigger picture, we continue with our theme that we were anticipating some form of intermediate market high to come in along the 134 to 137 level. Now, how the market plays it all out here in the next little while can come in a number of different sequences, but none of our scenarios really have the market going much higher than that blue box on the upside. Now, the one scenario is that we continue on right off the bat and do a proper test into the 127 level on the downside where all the lows came in January. If we ended up getting down to that area, we still probably can bounce off that. In the bigger picture, we think that a 10% market correction could see us down at the 122 level or lower within a reasonable period of time, but nonetheless it doesn't necessarily mean it's going to be a straight line move down. We certainly cannot at this point rule out the possibility that there has to be retesting of those previous highs and that the real market decline may not actually happen until April or maybe even May. So the way I would summarize is that we really don't believe there's much upside to the market, but it doesn't necessarily mean it has to crash here either. We really think that this is a period where option writing and is probably not a bad strategy as well. Buying some protection a little bit longer out on your positions to just hedge some of the downside risk. Next year, when we take a look at that ISE U.S. Regional Banks Index, symbol JLO, we had retesting of that 2450-25 support resistance line we've had drawn out for an extended period of time. At this stage, if we find some little short-term lows, we can't rule out the possibility that JLO could even pop back towards 26 on the upside in sort of like a retracing move. But more than likely, if the whole market is going to consolidate like a bigger picture theme, then JLO will probably still make lower lows at some point. Doesn't necessarily mean it has to start this week. Next year, I want to take a look at the ISE Syndex, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We've been relatively bearish on this index for an extended period of time, looking for further consolidation. We found some lows right now at this 125, 127 level. We do believe that that is an intermediate high at the 135, 137, where we were looking for it a month or two ago. At this stage, even if there is a retracing rally up to the 130, 132 level on the upside, we do not believe that it will make it back to its previous highs. Next year, I want to take a look at the ISE Home Builders Index, which is symbol RUF, and the home builders have more or less been consolidating at lower levels down here. This is a critical support at this 950, 970. If the home builders can dig in and get back above $10, then we could see retracing higher. But after all is said and done, if the home builders break below the 950 level on the downside and really get under that red zone, it really opens the window up for retesting the previous year's lows along the 8.5 area on the downside. So it'll be very crucial for this support line to be held over the next little while. When we take a look at the ISE Natural Gas Index, which is symbol FUM, we've seen quite a substantial reversal in the natural gas index, as we have seen in a whole array of energy stocks. At this stage, we've got to bounce off that 123, 125 focal point. We can't rule out even another double top retest along the upside, but in the bigger picture, this area has been overdue for a proper, healthy profit-taking cycle that certainly could last several weeks. So even though we certainly can't rule out again that retest of the previous high, we're not really looking for much higher from here. Finally, I'm going to take a look at that ISE Mini FTSE 100 Index, which is the symbol UKX. And we have a test right now into this 585.90 support line where the highs originally came in October, November. Really at this stage, we continue to consider this to be relatively range bound. Has broken down to lower lows, but whether we break below the 580 level or not will depend on what the global markets as a whole are doing. If we start seeing the European and North American markets all starting to go through another wave of further weakness, at that juncture a break of 580 would certainly have the window open for a test down into the 560 level on the downside. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.